5 stocks to buy June 2023. Welcome back to another Stock Dads video. My name is Chris, VP of Marketing at Stock Dads and one of our exclusive analysts. And we're going to go over some stocks that I still think is a great buying opportunity right here. Even though the market's been surging and going crazy, we're going to talk a little bit about that. I'm also going to quickly recap the 5 stocks that I mentioned last month and see how those did. And spoiler alert, they did really well. If you're not already subscribed, what are you waiting for? Hit that subscribe button and let's get started. All right, so last month in May, I mentioned 5 stocks. JFIN, which was at $5.50, it ran up to $8, a huge win there. We also have Perry stock, decent results. It was at $33 and then it hit about $34. KRE Regional Bank, that was about $37 as of recording and it hit a high of $44. QQQ, amazing month for big tech. One of the biggest months actually recorded ever. That went up from about the 320s to 360s. And finally, the last stock on that list was Charles Schwab at about $48 per share. That went up to a high of 55. So May was amazing. And thus far in June, obviously the market's been absolutely killer. I don't think it'll last forever, of course. We're due for a pullback, but that momentum and everyone anticipating a pullback and anticipating a recession, maybe there's just so much momentum and those people have to get back in the market or else they're going to miss out on that momentum, FOMO, and then the market just keeps going higher for some time. But eventually, of course, there will be a pullback. When that happens though, these 5 stocks for June 2023, I think will be great buys when we do have a pullback, whether it's July or August or sometime this year. These are going to be great stocks for the long term in my opinion. Most of them, one of them I will say is more of a speculative buy, but let's get into it. First stock here is Ulta Stock, Ulta Beauty. This is about a $25 billion company in specialty retail. And beauty, as we know, is a very important category. Whether we have a recession or we have good economic times, Ulta has shown that it can grow and grow and grow. It's growing its sales and net income consistently double digits for the past several years. Whether we have good times or bad times, people need to buy makeup, cosmetics, skincare, hair care, that type of thing is always going to be something that you need. So in a lot of ways, this is actually more of a consumer staple in my opinion, rather than consumer discretionary. We've seen that they've raised their prices over the past couple of years, and for the most part, consumers continue to buy. They have raised their guidance for sales in the previous quarter, and in the long term, for the stock price performance, you can see that Ulta has absolutely slayed. Very good stock price performance, and it's been on a pullback for about a couple of weeks here to about 25-30% down at one point, from about $560 per share to $400 per share. Great opportunity in my book, right? Especially as when you see the chart, it landed right on that trend line, and we like to buy stocks that hit some sort of support area. And I will say, because of that pullback in the share price, the PE ratio has been a really good entry point right here in my opinion. PE ratio is currently about 17, and if you look at the long-term historical average over the past 5 years, you'll see that the mean is actually at least around 22 or 23 PE ratio. So I think that there's potential again for a 30% upside, maybe even a 50% upside. I'm targeting 550 and 600 again. I think it can definitely get up there. A lot of tech stocks have been going crazy. At least with Ulta Stock, you can diversify and still have a company that is growing nicely, and it's going to be recession resistant. Stock number 2, Albemarle. This one is the world's largest lithium producer, and it is a US-based company. So lithium, as we know, is an extremely important battery metal, and EVs are going to take off. They have been taking off, but they're going to take off really exponentially in the next 5 years. By 2030, many people predict that half of all vehicles sold are going to be electric vehicles. In some cases, some estimates say that's going to be even higher than that, right? The current market share for EVs is very small, I believe around less than 10%. But as you can see, if the whole world starts adopting electric vehicles, we're going to need more lithium. Elon Musk has said we don't have enough supply of lithium. We're not going to have enough supply of lithium for the next 10 years, for the next 20 years. As that demand continues to skyrocket, supply is not going to keep up, right? Even factoring in projects that are going to come on board in future years, right? There's a lot of lithium players out there, but Albemarle is actually producing lithium. They have operations right now in Chile, in Australia, and in US, right? They're currently already generating billions of dollars in revenue and net income. That's what I like, right? I'd rather not buy some of those more speculative pre-revenue mines right now, in my opinion. I'm just thinking of playing it safe here. And the valuation, when you look at it, is very, very attractive as well. PE is currently 7. If you look at other valuation metrics like forward enterprise value over revenue, things like that, I think it is still very attractive when you look at the long-term historical averages once again. If you compare it to some of the other lithium producers out there, it does trade at a bit of a higher multiple. I'm personally okay with that because, again, it is a US-based company. Can get a little bit shaky when you're directly investing into a Chinese company or a Chilean company. The stock is still currently about 30% off of its high. It did bounce off of a key support around $170 per share, and it's been rising since. But the all-time high, again, was about 300s. So very nice upside just to get back up to that. As lithium prices recover over the long term, I think that this company is going to make a ton of money. Moving on to stock number 3 here is Perry stock. One of my favorite stocks, of course. If you watch my monthly videos, every video there's going to be a Perry mention in there. I still think it's a really great company. It's about a $1.5 billion valuation here. It got hit by a short seller report a couple of weeks ago, and I never thought I'd see a short report on Perry. So very interesting stuff there. A lot of speculation, as with all of these short reports, not a lot of facts, a lot of extrapolation and imagination, and saying that in the case of Perry is very interesting. This short report said Perry's financials are too good. They don't have a product. It doesn't exist. Their partnership with Microsoft is going to get torn up, and it's, the revenues are going to go down by 50% or something like that. I think it's just absurd. There's a lot of different points that I'm not going to go point by point and discuss, but with the Microsoft partnership, right? Perry's been working with Microsoft for over 13 years now, since 2010, I believe. And they renew that relationship every 3 to 4 years. The relationship is currently not set to expire until the end of next year. I don't see any reason why Microsoft would decide to terminate that. And in terms of their financials being too good, yeah, it's been really good. But that's not a reason to say that a company is fraudulent. It's a reason to buy the stock, in my opinion. I mean, I can only base it off of the facts. Perry has been consistently putting up revenue growth of 20-30% year after year after year recently, ever since the current CEO took over the company, Doron Gerstel, and their profitability has skyrocketed. You can see their EBITDA growth has been about 80% compound. Their debt has been completely paid off since the CEO took over. They increased their cash balance to $430 million with no debt, right? So this is a very, very cheap company. PE ratio currently is about 14-15, which has always been a great time to buy Perry on stock. I really think it's undervalued because if you look at other ad technology companies like Perion, they trade in some cases not even based off of earnings, but on sales. Perion, I think, should be a PE ratio of at least 18, 19, 20. So at a minimum, a 30% upside from here, if not 50% upside. And I think it's a great time to buy right now. After the short report, the stock barely even went down even. Consolidated between 30 and 33, and looks like we're heading back up. Moving on to stock number 4 here is Charles Schwab, another regular of my stocks to buy videos ever since the banking crisis in March of 2023. So Schwab got thrown out like all the other regional banks, which, by the way, as I mentioned earlier, KRE, the regional bank ETF, those stocks have been going back up like crazy. Would have been a great opportunity to buy those stocks. I took the opportunity to buy Charles Schwab, and I think that the long-term potential is definitely there, right? Schwab is it's not really a banking company. It's more of a financial services company. Most people know Schwab from its brokerage services, so retirement accounts, wealth management, They now have TD Ameritrade as part of the company, and over 7.6, I believe, right? 7.6 trillion in client assets recently. It was 7.3. So people continue to pour money into Schwab, and it's not like any sort of dangerous banking situation where people are just pulling their money out. Not to mention that I believe as the stock market continues to recover and we get past inflation and we start to have good economic growth again, people are going to put more money into stocks, more money into Schwab accounts, and Schwab is going to take that money and be able to reinvest it and just be more profitable, right? And over the next couple of years, as Schwab's bond portfolio matures, they can also start getting higher interest rates for those bonds and become more profitable immediately that way as well. So it's a good opportunity to buy into a great business when it's doing so-so right now. It's not the greatest it could be. But even then, its performance has been great. You know, the revenue growth in the past quarter and net income growth was about 10%, pretty steady. And PE ratio right now is only about a 15. The historical average, again, is 22. I like to buy stocks when they're down, and I know they're great businesses, and I know there is a potential for them to grow into a higher valuation. Schwab is going to take those profits in the future, I'm sure, and also increase that dividend and start doing share buybacks. Once there's more clarity about the economy and more clarity about any additional regulation with small, medium-sized banks or even the larger banks, I think that is a huge catalyst for the stock to go higher. All right, and stock number 5 is going to be MicroStrategy Stock. Now, this is the stock that I think is quite speculative on my end here. I'm only buying a small position. I know a lot of people are going to say that, what are you doing? This is not a good company. Well, the way I think about it, first off, to step back a bit, MicroStrategy is an enterprise software company focused on business intelligence and analytics. They recently signed a multi-year partnership with Microsoft in regards to AI data, which I think could be very beneficial for the underlying business of MicroStrategy. But at the end of the day, MicroStrategy is a play on Bitcoin specifically. Not necessarily crypto, but Bitcoin, because MicroStrategy owns 140,000 Bitcoin. They bought at average price around 29,000. That works out to about 3.54 billion in money invested into Bitcoin. Obviously, the price of Bitcoin fluctuates on literally a second by second basis. So I believe the current price right now as of this recording is around 26,000. So they are down on that position. But I personally think that Bitcoin could be undergoing another multi-year bull run. Not saying it goes up in a straight line back up to 60,000. But if you ask me, is Bitcoin going to finish this year higher or lower? I personally would say it's going to finish higher. And then the year after that and the year after that. So if that continues to be, or if that is the case, then MicroStrategy's holdings are going to automatically increase. Obviously, when they report their earnings, they're going to report a net income because the value of their assets and investments go up. And it's basically a proxy for the price movements of Bitcoin, right? This company does have about $2 billion of long-term debt, and the underlying business has not always been profitable. I don't think it actually is cash flow positive, but at the end of the day, it's an easy way to play Bitcoin. You could also consider investing in the Bitcoin mining companies. My take is just that MicroStrategy here, with at least some kind of underlying business, is safer in my opinion. It has some intrinsic value. And then you add on to the fact that Bitcoin, if it increases over time, that kind of step-by-step increases MicroStrategy's value as well. So that's just my personal take on it. If you're more of a traditional long-term investor investing in companies with profitable businesses and great balance sheets, the other 4 stocks on this list are good for you. This one is more of a speculative play. And as a bonus, I do want to point out one group in the entire market, which I think could be a potentially great buy here, and that is airlines. So I also recently just opened a position in Delta and Southwest Airlines. These two companies I think are going to do well. Over the past couple of weeks, they've started to break out. But when you compare it to the other sectors like tech, which has broke out about 10,000 times to, new highs and new highs and new highs, a lot of these airlines are actually not even where they were pre-pandemic. In some cases, like Southwest Airlines, that's near the lows of the past several years, right? The pandemic lows. So I think it's an extremely underlooked area of the market where if people start rotating their money, I think airlines is a no-brainer. A lot of these airlines are now very profitable. Delta is very, very profitable now. Southwest Airlines reported record revenue in Q1. They had a huge issue in the holiday period where tens of thousands of flights got canceled. But I think that they're going to be past that issue. Probably is just a one-time thing. And if you look again, Q1 was a record revenue quarter for them, so it didn't have a lasting impact. And they reinvest money into upgrading their systems. I think that profitability in airlines is going to go up. Right now, towards the summer months, you have the seasonality effect. You have people spending more money on experiences and travel rather than material things. I think that will continue to be the case. So airlines in general, bonus stocks to buy here. And I plan to add them to my position definitely if we get a pullback. All right, ladies and gentlemen, so that is my 5 stocks to buy in June 2023 with that bonus. So we have Ulta, we have ALB, Perry stock, Schwab stock, and MicroStrategy. And as a bonus, we have the airline stocks. I personally picked Delta and love Southwest Airlines, but you could always just buy the Jets ETF. That's a great one as well for the airline sector. With that being said, hope you guys enjoyed this video. Please give it a thumbs up and let me know in the comments what you guys think of these stocks. Subscribe if you haven't already. Be sure to check out the Stock Dads Discord as well. That is our private community where we post our trading alerts and investment alerts for stocks, options, and crypto in real time. We have live trading sessions, mentorship programs, a whole lot of education, and much, much more. See you guys in the next video, and good luck trading and investing in the stock market.